Hello traders, welcome to the weekly outlook and setups volume 291. Iliya here. You know what we're going to be doing, having a look at the markets, how they developed this week, what kind of setups we got, and most importantly what we can expect for the upcoming week, because it's going to be a very busy one. So without further ado, let's check out the economic calendar and head into the technicals. So we are going to be having an extremely busy week. The incoming week, we're starting Monday, so we have a little speech here from the FOMC member, and then we're having all the PMIs. So starting again French, German, then Eurozone, then GBP, and then USD manufacturing and services PMI paired with the existing home sales. So Monday already looks like a pretty volatile day that is probably going to give us either the manipulation or the overall introduction of volume and direction for the week. Again, Mondays are usually 50-50. They tend to usually make a manipulation in the opposite direction and then usually see a reversal, but sometimes the market just goes from Monday's direction and then it usually tends to follow through. So we really have to observe which direction Monday is going to take. Going on to Tuesday, we're having CPI for CAT, so any CAT traders, make sure to watch out. And then we're having Mr. Powell testifying for 2 days in a row. So of course, after the last FOMC meeting, the members of the Fed are starting to not argue, but they start having different views about when to cut rates. Some are saying that because of tariffs, the rates should not be cut at all. Some are saying that they should be cut. And so there is a lot of uncertainty going on within the Fed as well. All right. And then, of course, he's going to testify. And then we're having consumer confidence and manufacturing index. Wednesday, another testimony here with new home sales. Thursday, unemployment claims, GDP, and all of these USD news. And then on Friday, also PCE price index and then consumer sentiment. Like every single day, we're having news for the USD, which is amazing because, again, like the USD is kind of the main pair that drives the overall market. Like if the USD is choppy, then of course EU and G are very likely also going to be choppy. And also indices have been very choppy for a while. So hopefully all of these news, potentially Powell could say something that is going to shake out the market. But I do believe, because we've had quite a few choppy weeks right now during June, there is going to be 1 week that is going to shake out things. And it could be this week, just judging by the news. So let's see how the technicals look like. There are so many prop firms out there, but the one I prefer is FundedNext. First off, they have multiple plans, but my favorite is the Stellar plan because you actually get paid to pass your challenge, which is a huge incentive to treat it professionally. They offer a 95% profit split and payouts hit your bank account in under 24 hours, or else you get paid $1,000. FundedNext offers competitive profit targets and crazy affordable pricing. Like for just $32, you can control $5,000 account on their Stellar Lite plan. It's crazy value and they accept all payment methods, credit card, PayPal, even crypto. FundedNext is well established in the UAE with a strong reputation, rated 4.6 on Trustpilot with over 27k reviews. I trade with them, my community trades with them, and we love them. Now it's your turn. Use the link in the description plus code FANATICFN for 120% refund when you pass your challenge. Before we get started, make sure to join my free school community. It's an absolutely incredible, positive community with a lot of value from everybody. And the classroom here is a full course that I've never shared anywhere. So make sure to join. It's the first link in the description. Okay, we're going to get started with the DXY. As usually, I'm going to reverse engineer it by first actually starting on the volatile time frame and having a look at my last weekly outlook. So again, like we were tapping into that daily bearish imbalance, the market looked like it wanted to follow through, and we had that volatile bullish. And then I said, okay, let's see which direction the market is going to pick up. Is it going to start pushing higher to really guide us higher, or is it going to start pushing lower towards the liquidity? And as I just told you, right, on the economic calendar analysis I made, usually Monday tends to throw a fake move. Okay, so as you can see here, kind of my forecasts didn't really play out as expected. But for example, here, the first thing we did is we made a volatile bearish imbalance, okay? But then the market really didn't make anything out of that. And what it immediately did is it made a volatile bullish imbalance. So again, how I trade is I'm always following the most recent ones, because again, that signifies the most recent momentum in the market. So you can see that bearish one failed to really follow through to push the market lower towards the liquidity. And then suddenly we get the bullish one. And then pretty much on Tuesday, there was a lovely trade on EU. That was kind of the trade of the week for me and the Fanatic community. And then since then, we kind of entered into a little bit of a chop here. Again, you can see we introduced the bullishness. Then we still kind of gave a long here on Wednesday, but Wednesday was Fed day, Fed rate, so we do not trade on a Wednesday. And then pretty much, yeah, the Fed pretty much press conference made the move. And then since then, we kind of ended up consolidating. So honestly, the only trades this week, according to me, was that Tuesday long, which was a very nice short on EURUSDG. It was a little bit choppy, but EURUSD developed pretty nicely. So right now, if we go back to the weekly time frame, what we're seeing is that we're starting to sweep this low. And if you look on the weekly time frame, like where is the liquidity on the weekly? Well, we don't have a swing point. So how I look at swing points, pretty much I look at them in the form of fractal highs and lows. So that here is a swing point. Why? Well, because it has a lower high to the left and a lower high to the right, right? And you can see here within this range, we don't have such a thing. So does that mean the market is going to target that monthly imbalance? It could be, but of course, that is a very bold call to make. Now on the daily time frame, if you just zoom out a little bit, right, we have been in a downtrend for quite a while. So usually it's going to take a lot of power and a very big catalyst for the market to turn bullish on the DXY. Now, for example, here we can say, hey, we have a first sign of some sort of a bullishness because the market is printing a daily bullish imbalance. Well, however, sure, we also had it here. The market failed it and then it turned bearish. We also had it, for example, here and here. Okay, the market kind of looked like short-term bullish for a while, but then it still failed and still ended up attacking the major liquidity. So just because we're having, again, that bullish imbalance here, it doesn't mean much. What I truly want to see eventually on the DXY is for us to break above that high. Because if the market breaks above this high here, that is going to start unlocking all the rest of the highs. Because again, that is the most recent, if you look at market structure, that is the most recent lower high. And if we have a trend change above that lower high, right, technically making a higher high, that can potentially introduce a lot of buyers. And currently we are in a sort of a transition area where the market's made a low, it's made a lower high potentially. And right now from this daily imbalance, we can see if we're going to have a higher low formation. And if we actually start having the higher low, we can be looking to long, and then if we actually take out that liquidity point and make imbalances above it, that could be the potential bullish reversal. However, I will just say it's still a little bit too early to be calling bullish reversals. Okay, we're getting a little bit of a sign here with that daily imbalance, but here the last pretty much 3 days were choppy, not telling us as much. And then if we also transition onto the volatile time frame, you can see here a little bit messed up. We have that volatile bearish imbalance with a gap. And the market fully filled the gap, which was kind of the main question for me and my team trading into Friday. Is again, we had that crazy gap, but then the market tapped the volatile zone, and then I said, okay, well, is it high probability to short from that zone, knowing that we have the full gap to fill? Probably not. And you can see the market came in, reacted, but then eventually it ended up going to fill the full gap. So do we have something right now on the volatile time frame? No. We ended up kind of Friday choppy. We failed to really follow through from that volatile imbalance. We're not making anything bullish, okay? So pretty much I want to see really how the market is going to respond from that daily imbalance. I cannot forecast from now that it is going to come here because that will be calling for too much. But if it does come here, I would definitely love to see the longs, okay? And also if the market starts picking up with some bullish steam above this high, on Monday, Tuesday, then I would also be looking for the market to potentially go higher. Now, I am calling a bullish dollar a little bit simply because of that very recent bullish order flow that we have been getting. But as I keep saying, guys, until we take out this high here, okay, that is the daily lower high, I will still be very 50-50. And of course, the first sign that the market provides me that it actually wants to go lower, I will be there to take the short. Okay, so let's see. I am inclining more towards longs, although it's still very, very, very early to say. But let's see how it's gonna play out. Really watch the interactions from that daily imbalance. Really watch what the initial price action is going to start telling you, and then from there we're gonna see. Hopefully, I'm gonna update you this Wednesday because we're very likely gonna have some clear price action. So looking at EU, reverse engineering it back from my analysis. Again, here what I wanted to see is the market potentially break above, for example, here, print an imbalance, which I have marked right there, which it actually did, but you can see it did not follow through to the liquidity. All right. As I wanted it to see exactly, we printed a 1 hour order fall imbalance, but then as we pulled back into it, we immediately printed also the bearish one. And this is where we got the Tuesday short. That is kind of the trade of the week right there. Okay. Into where? Into the daily imbalance, which was kind of the third liquidity point that I had. So you can see I always have kind of these liquidity points, but it really depends on how the market is going to open. This is why the biggest value, for example, within my private program is the morning analysis that I do, because right now I do it on a Saturday, but then of course Monday is going to open. It's going to show us something completely different. So if you don't have the skill to be flowing with the market and really knowing all the levels, all the key levels that you need, you could potentially get a little bit lost. But pretty much, yeah, the trade of the week was this short here, really seeing that the market is failing to impulse above that high, starting to shift the structure. Very beautiful short here into the daily imbalance. And then pretty much here, this short was a low probability short because we're tapping into a daily bullish, into a hourly bearish. And also that was the Fed day, so we do not trade on that day. Still, it ended up following through, but not really impulsing below that level. And we also tapped into this block we have to the left, also beautifully respecting it. And what I start seeing right now, if I just delete everything and just quickly check out the weekly time frame, we're not having a weekly imbalance, which is okay. We're having an inside bar on the weekly that usually suggests next week could potentially have a shakeout. Daily time frame also nothing much. I mean, we're pulling back into that daily imbalance and we're having 3 candles overall respecting it, okay? How do you know when an imbalance is disrespected or not? Well, you have to look at the overall candle anatomy here. So candle 1 comes in, very bearish, which is not a great sign, but then the second candle sweeps below the previous candle low, and then the third candle here, this one on Thursday, also swept the previous candle low. So we can see we're not really getting body closes below the previous candle lows, and we're also really not breaking below that daily imbalance. So this to me still looks like it's overall holding, and also with that block here definitely gives more confidence for the long setup, which does not resonate with the little long forecast here that I made on the DXY. So one of them is going to be wrong. Do we know which one? No. This is why, again, the biggest skill for trading is to be flowing with the market. Okay. Now here what I see is, again, that very short-term bullishness. The market flipped bullish. Forward imbalance, it took out some liquidity here. It tried to continue pushing higher, but it failed. So currently, again, you can see, like, do we have any zones to work with? Not at all, right? This daily zone, sure, the market is trying to push up from it. Okay, then from the daily, we actually got a quality bullish, amazing. The market tapped in, it pushed, okay, but then it did not follow through with a new quality bullish imbalance, which to me immediately makes this low as liquidity. So I can presume the market might want to attack that liquidity, and then what happens afterwards, guys, this is what we have to see. Are we going to break below with imbalances to potentially start targeting the opposing side here? Are we going to sweep it, okay, and then start closing above, breaking structure to then start targeting the opposing liquidity? So for example, here and here, okay? So those are kind of the two outcomes, because I'm not 100% sure of the bias. And now, meanwhile, why I told you kind of the DXY looks a little bit more bullish simply because of that daily bullish imbalance. That doesn't mean it's gonna go bullish, okay? Because EU, if it picks up some steam, and currently the euro is extremely strong fundamentally against the dollar especially, we can definitely continue on the overall bullish push. Because again, if you just zoom out a little bit, right, we've had that massive pullback, we have the push. Right now we have a very brief pullback, so like, is this going to be enough to push the market higher? Well, is there something below us? All right, well, there is nothing. There is nothing on the weekly for the market to pull back into. There is nothing on the daily for the market to pull back into. So if there is a lot of bearish steam being introduced onto EU, right, all of these lows are going to become liquidity. But for that, guys, we're going to need a very big catalyst, okay? For the market to come back all the way into that monthly and take out all that liquidity, we are going to need a very heavy catalyst, which we haven't had so far, and the market has been overall choppy. So let's see. This is my overall outlook. Absolutely no zones to be working with right now. So guess what? I'm going to be waiting for new zones to be created or for liquidity levels to be engaged. Currently, that is the only recent liquidity level that I have. So either I want to see a break below with an imbalance to go short, or a sweep with an imbalance above for a continuation higher. Let's see. Let's check out GBP USD. Not very bad this week. So we kind of ended up the week with that hourly bearish imbalance that the market tapped in on Friday, and it kind of reacted from it. But again, you can see how I always tell you that Monday is usually a very low probability day to be trading, because it's usually going to give you a fake move. Again, you can see Monday opened and it actually gave us a little bit more bullishness. So this is one of the scenarios that I wanted to see, right? The market going higher, okay? And it actually looked pretty good. We were breaking above that structure. We were making a forward imbalance. So potential longs from here are looking pretty good. But then you can see the market just absolutely massively dumps. That was on that Tuesday where EU provided a beautiful short. But here, for example, you can see not only we had a forward bullish imbalance here, but we didn't have a bearish one. So actually choosing in that moment whether to short EU or to long GU was a very tough choice, right? And then pretty much we got the very massive sell side imbalance here. The market straight took us onto the weekly. In fact, here it just missed the weekly imbalance, all right? So if you were looking, for example, to short from this imbalance, unfortunately, that was once again the Fed day. So I personally do not trade on that day, but if you're looking to trade, that very nicely brought us into that weekly imbalance. And then from there, once again, we kind of started giving a little bit bullishness, not a lot of it, honestly. You can see we had a forward imbalance here, and then we also have one right there, which is something that I do not like. Why? Because the first one should have held. Okay, the first one is also aligning with that block to the left. The market tapped in, it tried to follow through, okay, but it failed to make a new imbalance, which immediately makes the low liquidity, and that liquidity was taken. This is exactly what I want to see, for example, right now on EU. When the market taps an imbalance but fails to follow through, all right, usually that low becomes liquidity because it's a weak low, and here we already took it. Now here we're tapping into a hourly, what I would call a reaction area, and at the same time we're getting a hourly bearish imbalance. So a very interesting development here. We're tapping into that weekly imbalance, which is super important, guys, okay? But we kind of consolidated above it for 3 weeks, and right now the market is coming with a lot of steam against it, right? And something extremely important that I was almost about to miss if I didn't go to the daily is we're having a daily bearish imbalance, okay? So I want you to see how mixed up that is. Weekly is bullish, daily is bearish. Hourly kind of came in bullish, but right now the hourly is starting to give us a little bit more bearishness. So I really want to see as many time frames to align as possible. So right now I can even go to the 1 hourly time frame, and the 1 hour you can see it's also bearish. So currently the shorts are more in control. So if we happen to potentially react from that reaction area into a hourly imbalance and then start trending lower, then I will be looking to target this low here. Okay, but still keep in mind we're coming from that weekly imbalance. We have made a trend change here, but we're tapping into a daily imbalance. So again, you can see it's very 50-50. I do like the shorts a little bit more because I really like that reaction. However, if the market happens to break above, okay, so this is a reaction from the daily. Okay, this is a daily reaction. If the market happens to break above this daily reaction and close above it with an imbalance, that is longs. Okay, so there are the two outcomes: potential shorts into the liquidity, but if we happen to form a higher low here, right, you can take a fib, for example, boom, the market's pulling back right now into the golden zone, whatever you like to call it, right? There it is, 50%, 61.8. And then if it holds from there and breaks that reaction, then I will be looking for the longs. So let's see. Again, you can see overall 50-50 because the DXY did not give me a very clear bias. And it's also a little bit 50-50 on the majors, especially GU because it has weekly bullish, daily bearish, hourly overall bullish in terms of structure. Right now it starts to give us a little bit more bearishness. So definitely waiting for Monday to pass is going to be very key. I mean, Aussie dollar, just zoom out a little bit and then see what's going on right there. We're in a very massive consolidation. Really nothing is following through here. We had that hourly bearish and I said, okay, well, the market could potentially go to the liquidity. No, the market opened and it went for the opposing side, right? It sweeps the opposing side, and even though it kind of looked bullish here with that hourly bullish imbalance, it tried to push, it failed, and then it flipped lower, and then suddenly, all right, it looks bearish. No, market taps in at the same time printing a bullish one. It goes higher, but then as it goes higher, it doesn't make any imbalance, so then this becomes your liquidity. The market takes that liquidity, but unfortunately, you probably don't get a short trade. Then it pulls back into this imbalance that was created here, and then ends up bearish. I mean, that is a pair that I just do not touch at all. Why? Well, because just look at the higher time frames, right? The weekly time frame is absolutely chopped up. You can see some crazy wicks into the highs. You can see overall super choppy price action. Going on to the daily, I just get dizzy when I open this. This looks like a barcode here. Like, why would you trade something that looks like that? Bullish day, bearish day, bullish day, bearish day, bullish day, bearish day, right? It's just nonsense. Like, until I start seeing clear daily imbalances here for the market to really get shaken out, I'm absolutely not touching this. I mean, if I try to force something right now, I see that the very recent liquidity on the daily is down there. Hourly time frame, I mean, hourly time frame has been making some bearish structure right now, so it's maintaining the lower highs, which is a bearish sign. The very last thing that we did is a hourly bearish imbalance with pretty much taking the liquidity. So if we happen to pull back into that hourly imbalance and actually really hold from it, we can then be looking for some sort of shorts. The market doesn't have any reaction areas here to the left. The last one was this one, and the market actually responded very heavily from it. And now if we happen to close below that low and below this low, then that could potentially expose all the way down this daily low. So that is how I will tackle this one. Kind of looking a little bit more bearish. I do like it because it's been, for example, from here it made that market structure shift by breaking that low, and then it pulled back, made a lower high. Again, on the macro scheme of things, okay, I'm not talking about like all these recent changes. You can definitely look at these, but again, lower high, lower high, lower high, that is a lower high. So if we happen to make another one that is protected, we can head for the lows. So I'm gonna say bearish bias on Aussie dollar, which kind of again really feeds on that bearishness on EU. Bearishness on GU that I see. EU kind of 50-50, and again, I still find it hard to find a lot of correlation between all the different pairs to kind of build a more specific outlook for the DXY. But on AU right now, just purely based on this closure, I am bearish. I don't see any bullish signs. But of course, here I was also bearish, right? But the market failed to follow through, and then just boom, it went bullish. So again, guys, always expect both sides and always be flowing with the market. Well, USD, exactly the same development here. We kind of had that fall bearish, and then I said, okay, we can just go for the liquidity. But no, the market just opened up and it went for the opposing side of the liquidity. And then, yes, it gave us that fall bearish imbalance here. Tapped in once, 2 times, 3 times. That is the Fed day, so you probably do not want to trade this. And then after the Fed, pretty much during Asia, the market flushed, pulled back for another lower high. And right now it's flushing very similar to the Aussie dollar. Now, if we check out the daily time frame, where do we have liquidity? The liquidity is all the way down there. Probably we're going to have something more recent on the FOH. So on the FOH, we have this guy here. So there are our 2 liquidity levels that we can be looking for. Again, on the closure, we're having that probably bearish imbalance. And we're also taking liquidity here. So will the market give us a potential pullback into this and then to potentially head for the liquidity? That would be very nice. And yes, I do see overall, for example, the overall order flow, right? So you can see Huawei respected, created a new one, Huawei pulling back, respected, creating a new one. That is a downtrend, okay? So it's honestly not that bad. You can see on AU and NU, I have a more specific bias. Well, simply because the market is not very mixed up. It's going down right now. It's respecting the Huawei bearish imbalances. And even though it's absolutely choppy on the weekly and the daily, right? If you look at the intraday and if you really start seeing the market starting to break out a little bit, to shake out and to pick a direction, then this is when you can potentially jump in. So let's see. Huawei bearish imbalances here. Are we going to get a pullback to potentially short? These are my 2 liquidity levels. That is a Huawei swing point and that is a daily swing point. If the market continues to make lower moves with imbalances, then we can definitely continue to short them. So let's see how it goes. With the ongoing war right now, with the Fed starting to get a little bit uncertain, with tariffs, with Trump, with everything, we got a little bit of an indecisive week here on gold. You can see here, I'm on the volatile time frame. It was absolutely chopped up. And even though that, me and my community managed to take a win. For me, it was a partial and a break even, and then the market followed through. It was on Monday. In fact, right, on Monday, the first thing we see is the market creating a volatile bearish imbalance, then immediately attacking that liquidity. You can see I was actually waiting for an imbalance to be created on Monday to go long. But what the market immediately did is invalidated it. So guess what? This is bearish for me, targeting the daily zone. All right, this is how I flow with the market. So as soon as I started seeing that the market is going to be invalidating that imbalance, I immediately started jumping into shorts, and we took the short right there. But if I just kind of go here, the majority of the profit was taken on that wick, and then the market massively retraced. So a lot of us went break even, missing out on that move. I managed to take a partial down there at least, but unfortunately it was not a full win. And some of my members who didn't go break even, they managed to capitalize on that beautiful move. And that was honestly the trade of the week, okay? Because on the next days, we absolutely did not have any setups. The market was stuck inside Asia, right? Stuck inside Asia here. We don't want to be trading price action like that. So honestly, nothing to break down much. But again, we're having right now a bearish week, sweeping the previous weekly high. But on the daily time frame there, we're having a 4 days of chop here. So apart from Monday, where we actually took the short, me and my community, then after this, it was a very big chop. And this daily imbalance is really starting to run out of steam. But like the thing that I really dislike right now is that it's not giving me commitment and conviction. Okay, it tapped in, printed the bullish candle, sure, but then the next candle is bearish, but it sweeps the previous candle low. Then the next candle is kind of bullish, and again it sweeps, and then the next candle is indecision, and you can see we keep sweeping the previous daily low. We're not really closing below the previous candle low to really show me that, okay, sellers really took control. Every single day we sweep, reject, we sweep, reject, we sweep, reject, right? And for the first time here, for example, on a Friday, which is again a low probability day to be trading, right? Because again, the market could have reached the weekly low, and then you're literally trying to forecast that the market is going to keep going lower, right? We had a bearish imbalance, but again, it's coming from a sweep here. The market pinged in, massive reversal, and then how we also end up the week is with a bullish forward imbalance. So extremely interesting positioning on gold. We were very close towards that liquidity target here. Okay, but we just stopped very close to it and we printed that forward bullish. Now, what I really want to see right here, guys, is a little bit of a structure shift. Okay, a trend change. So because what we have been observing right there is probably have to go to the 1 hour to visualize it a little bit better, is lower highs, lower highs, lower high, lower high, lower high, lower high, lower high, right? You can see them absolutely everywhere. That is a very big downtrend of massive liquidity. Imagine how many sellers are there having their stop losses above all these highs. Okay, so if the market really makes a trend change, like breaking, for example, the most recent forward swing point right here, or really starting to make higher highs and on the 1 hour time frame, currently again you can see we're not really yet broken like a significant structure like that. Even if you have a look at that major 1 hourly high, we haven't broken anything. So we're getting that Friday buy off. So is this really launching buy orders from the institutions, or is it just some profit taking at the end of the week for us to resume lower? We really need to see. But I can tell one thing: when gold right now is going to get a catalyst, it is going to move big. All right, so if we happen to respond from that forward imbalance and really break above this structure, okay, that can potentially cause a very big buy side imbalance, stopping out all of these people, and then we can potentially get a very large move higher. However, the opposing side of the coin is also true. Okay, if really these sellers actually protect their position and the buyers really don't outweigh them, okay, and if we start getting a failure of that forward imbalance and we then take out that low, okay, taking out this low here is going to expose all of these lows, because these are then also some higher lows that were maintained. And if, for example, the market starts taking out the first low that is here, then that is going to expose the rest, and we might end up getting a deeper pullback into, I mean, yeah, on the monthly time frame, we don't even have nothing on the monthly. We don't even have nothing on the weekly, because the weekly is coming from here. So kind of we're looking at exposing all the way down the weekly liquidity, because this weekly imbalance is not following through, which means that this low can potentially turn weak. But until then, we have a lot of price action. So that is a very big forecast to make. So again, guys, you can see at the end of the day, what it all turns out to, what trading is literally flowing with the markets and not forecasting too much, not saying, hey, gold is gonna go right now to 35, because you have absolutely no idea. Like if you're this type of trader who comes in right there and says gold is gonna go bullish to 35, gold is bullish, blah blah blah, it's gonna go there from there, you absolutely don't know what trading is about, right? It's not forecasting. It's of course having a strategy that you have a way to forecast, that you have a way to expect what is going to happen, but it's all about flowing with the market, reading the battle between buyers and sellers, and really positioning yourself when the momentum is actually clear. Currently, it's absolutely not clear. It has been bearish for a while, but with a lack of momentum. We got bearishness, we got bullishness. This looks like a very nice V shape. So if really the buyers start kicking in, that is going to start making the sellers cover to close their positions. So a closure of a sell position is going to turn into a buy order, and we're going to have a massive bullish imbalance. But of course, if the sellers prevail and stop out all the buyers that are trying to enter from here, we could have a sell side imbalance. So again, extremely curious how gold is going to play out next week. Let me know, of course, in the comments what you think, for those of you that like to throw forecasts, but very curious to see how it's going to go. Well, looking at USD/JPY, definitely not bad. Like, look at that bullish market. I do hope some of you guys traded USD/JPY this week. So again, I had two outcomes here. Because we had that forward bullish imbalance, we definitely could have followed through from here and really continue towards that bullish liquidity. Or of course, if we created a bearish imbalance here to potentially guide us lower, we can continue for the opposing side of liquidity, right? And we can see that on Monday, the market immediately took out here the very recent liquidity. But then what happens, guys, is again, if you watch carefully what I say, like there's a lot of value in that. The market really failed to follow through with a new bullish imbalance here. So what that makes then is it makes the retest of the previous imbalance weak, right? Like strong and weak highs and lows. However, this one is extremely objective. Okay, and then the market came in to take out that liquidity, but what happens? Does it break it or does it sweep it? Where it very clearly sweeps it, and there is also nothing bearish to push the market lower. So then guess what? It's gonna go from liquidity to liquidity, right? Boom, it took it. Now what happens afterwards is we actually create an imbalance bullish. So there's your long trade right there. Beautiful long trade here, following through again. So again, does it sweep or break? It breaks it because it's bullish. Now here, unfortunately, did we take the liquidity? Oh no, we just stopped. Very interesting. We just stopped very briefly, and then the market entered into a very interesting pullback here. This is why I don't like these JPY pairs, because kind of they're doing some random moves from time to time. We didn't have a daily imbalance to pull back into, although the market threw that very massive pullback that was on the Fed day to come and sweep all the way down this liquidity, right? And it swept it, pulled back into that imbalance, reacted from it, but then it broke the reaction on that candle. Then after this candle, you potentially know it's going to go for the liquidity. It went, and then again the same process repeats. We have an imbalance here, the market pulls back and goes for another leg higher. Very nice. I mean, definitely not a bad development. So looking at the weekly time frame, it's extremely choppy, but we're having a very nice bullish week. That also feeds a little bit more on that bullish bias on the DXY, but on the DXY it's very early to say. So daily time frame, do we have a daily imbalance? Now I wish we had one. But we do not, right? The market is traveling higher, but it's getting very close to a very major liquidity point, right? And if you study a little bit just structure here, you can see that the market has been compressing. However, higher lows are being maintained on the macro scheme of things. And although we have like a lower high coming in, right now, if it really violates that high, we already violated that one. Again, starting to confirm that higher highs and higher lows are forming. But if we violate that one and if we close above it, that could potentially trigger some more bullishness, okay? And then, of course, above that, we're going to have this. This daily reaction area where we can potentially seek a reaction. And then right now, dropping onto the quality time frame, I really do like this uptrend, right? We're closing up with, in fact, 2 bullish imbalances. That is definitely a very strong sign of bullishness. We're having that retest structure as well. I mean, this is a very simple setup, is just looking like that. Very nice, very clear. We have the liquidity target, very major liquidity target, and then above that we have that daily reaction area. We have a very small quality zone here that you can also mark up. These are all kind of smaller areas that the market can react from. Okay, so let's see. This is my outlook on USD JPY. I'm not gonna lie, it actually looks pretty good. We're starting to establish a trend. The market is kind of respecting the overall structure and liquidity. It's just that on USD JPY, what I spot is it follows through for imbalances, but a lot of times it kind of comes into to make these sort of sweeps, okay, and then it ends up continuing. But then of course you have to be aware of these things so that you know how to position yourself in the market. So that's USD JPY long bias. Let's see if the DXY is also going to kick in with some long bias, which is really gonna boost UJ. Well, seeing UJ being so bullish, I'm not surprised to also see some nice price action on EJ. I mean, EJ was very close to the liquidity here, so I just said, okay, let's wait to see if it's gonna take it. It did take it, and then it kind of followed through, and then it pulled back very deeply. So let's see what it did pull back into, because that looks like we're forming some hard time from imbalances right now. And yes, actually for 2 weeks in a row, Euro JPY hasn't been doing that bad, right? We can see we are right now tapping into that weekly reaction area, which is pretty important. So we can expect some bearishness from here, okay? But on the daily time frame, yes, I mean, that was not a bad setup for those of you trading these JPYs, which I do not. That was a daily imbalance. The market tapped in, and then on Thursday it actually really gave you the move, and then Friday gave you the follow through. We have an extremely small, like a very, very, very small daily imbalance, which again, you probably don't even want to drop because it's very small. And what I want to see here again is sometimes I say, well, let's wait for Monday to close so we can have a daily imbalance on Tuesday here. Okay, So if we happen to make a daily imbalance on Tuesday, that is going to align with that overall OB as well. And then we can look for a pullback and a continuation higher. Of course, if USD JPY also allow this, and of course, if you're trading a pair like EJ, you should always be monitoring EU as well. Okay. And now, of course, here on the 40 time frame, we also have a forward imbalance that we're ending up with. Am I going to go long from that? No. Why? Because the market is just tapping into a very important reaction area. So that reaction area can cause the market to pull us back a little bit, right? You can even expect to pull back like this into an imbalance that hopefully forms after Monday closes, and then from there we can be looking for the longs. Okay, so weekly time frame is guiding us long, daily time frame is overall long as well. I mean, not gonna lie, these JPYs are starting to look a little bit better after all of this, right? After all of this, it's starting to get a little bit better. So if you are a JPY trader, then that is your time to shine. So let's see if the longs are gonna follow through. Because GBP USD right now is a lot weaker than Euro USD is, I mean, EU is a lot stronger right now than GU. You can see here we're not getting that beautiful price action we're getting on EJ, higher highs and higher lows. Here it's kind of, we swept, we went all the way down, and right now we're trying to go up, but we're also not taking out the high. So it's rather a little bit uncertain. So GJ, like, this has been a very choppy pair for a while, but I mean, we're having a daily bullish imbalance here, which is not bad. We're having a clear liquidity target above here, which is also not bad. And if we go to the 40 time frame, unfortunately, we don't have anything on the 40 time frame to push us towards that liquidity. So the very recent liquidity then becomes this low, and then of course the rebalance into the daily. But a lot of times the market can find some sort of steam. Maybe it pulls back just a little bit to take out a lower time frame liquidity. For example, on the 1 hour here, it can come in to sweep that low, and then from there it can find the power to push towards the liquidity. But if that doesn't happen, and if the market starts guiding us lower, then we can come into that daily, and then from the daily we can see if the market is going to reverse. So to me, GJ, if you're looking to trade any of these JPYs, currently EJ is looking 100 times better. It has been in a very beautiful recent uptrend, while if you compare it to GJ, come on, GJ, I mean, nah, GJ has been in an overall chop overall here. So again, pick your poison, pick which one you want to take. To me, EJ looks a lot better. GJ has these zones here, but I do not like it. All right, welcome to the futures part. So June has been very slow for me. In fact, just this week it turned into a losing month. Of course, we have one more week to go. But yeah, the first 2 weeks I was break even, and then this week I took some losses on a Monday that were, yeah, could have been skipped, but it's okay. And then the rest of the week it was extremely small. We had the Fed day, which I don't trade, then we had a bank holiday, and then we have Friday where no setups were provided. So very slow, and you can see it on the weekly candles, right? We are not impulsing, we're not moving anymore. There is a lot of uncertainty going on. And again, even if I then drop to the daily time frame, we are during one of these periods where the market kind of tends to really slow down, and those are kind of periods where you tend to have, for example, a losing streak, a losing month, right? But when the market kind of starts exiting these periods, usually they're followed by some amazing price action where you truly capitalize. So again, I do feel like such a catalyst should be incoming, because we have been chopping out for quite a while. But of course, I keep showing up every single day and executing my plan. Now here we are coming into a sweep of that very recent daily liquidity. The market rejected it. And honestly, there are no zones, there are no levels, there is nothing right now on ES here, which makes it extremely hard to forecast anything. So here, for example, on the 40 time frame, I mean, yeah, if we have a look at the very recent price action, we have this 40 bullish imbalance here that actually got tapped on Friday, and then we responded. Okay, but this to me is not bullish sign, because still if you zoom out a little bit, you can still see that the lower highs are being protected right now. So until we really start seeing a breakout above, like we see a higher high, then I'm not gonna be very long biased still. But we're tapping into that forward zone, and then very likely if I go to the 1 hour, there's gonna be a lot of bearishness. Well, not really. We have this 1 hourly bearish here. I mean, very, very choppy price action. There were some moves here and there, but they were done in an extremely choppy manner. And again, like, because, for example, I only trade from 1630, that is 930 in New York, you can see a very big chop here. And then if you plot that, it was choppy every single day without any follow-throughs, right? So honestly, again, currently I don't have absolutely any outlooks, and I don't have any idea where the market is gonna go. Pablo this week with his two testimonies can shake out the market. We have PMIs, we have a lot of USD news, so hopefully we're going to be getting a catalyst. But of course, the biggest catalyst right now are the development between Israel and Iran, and Trump's stance towards that, and the EU is also doing that, and this and that. But again, I'm just looking for price action to truly show me where it wants to go, instead of trying to kind of digest all these news and trying to kind of formulate a thesis, which again is always going to be subjective, right? The only thing that is objective is price, right? Price is what pays you. So again, follow price, right? But yes, unfortunately, guys, absolutely nothing to say. We're coming a liquidity gap. We're getting a follow bullish. Is this going to follow through and start guiding us higher? That would be great. Is it going to invalidate that, break below this reaction, and then start guiding us lower? That will also be great. But currently, just absolutely nothing to say. Let's see how Monday is going to open. And hopefully this week we kind of throw a little bit of volatility, because for me and my strategy, it thrives on volatility and on momentum. And when we are consolidating on the daily time frame, that is when it usually gets a little bit slow. And I do tend to have a slow period and maybe a little bit of a losing month. So let's see if the final week is going to make it up. Well, nothing really different on Nasdaq as well. I mean, five kind of choppy weeks here where we haven't really done much. You can see, for example, this week here, imposed around, let's say, I don't know what that is, 1,200 points, and then 5 weeks in total did pretty much the same, right? So we're not moving, nothing on the weekly, then dropping onto the daily. We kind of have that similar sweep that we have on ES, but yeah. Then going from there, we have this liquidity as well that the market can come into sweep. There are absolutely no daily zones on Nasdaq. Dropping onto the quality time frame, here in fact we're having a different development than we have on ES. Why? Because the fall imbalance was actually tapped right here. It tried to follow through, it failed, okay, and then we're taking the liquidity. Okay, so this fall imbalance here is no longer relevant. We're not also getting a fall bearish imbalance, which means that the market is also not really impulsing lower. So again, what is happening next? Okay, the market actually came into sweep also. This order, you can see, guys, we're only getting sweeps and lack of clarity about the direction right now. So in these market conditions, you have two choices, okay? Well, we have a lot of choices, honestly. You can take a break and you can wait for the market to really shake out on the daily, waiting for a catalyst. You can cut your risk, okay, to potentially minimize losses, or you can just keep showing up to execute your strategy and go through a losing streak, which is also extremely normal, okay? So again, currently, absolutely no zones to work with, absolutely no clarity on the daily, very choppy market. So again, I'm just looking for a shakeout somewhere. I don't care where. I just want to trade and scalp the market. But in order to do that, I need a little bit momentum. So hopefully this week, something is gonna shake out the tech stocks as well. So let's see. But again, guys, no outlook here. I have absolutely no idea, and there is no way to forecast it, okay? What I can just say is if it goes lower, I go lower. If it goes higher, I go higher, right? But again, making this sort of forecast to a lot of you is not valuable, but in some cases like that, where you have no information, then there is nothing to do. YM always offers us maybe a little bit more of a clue about what could be happening on the other two. However, here we can see once again 6 weeks of doing absolutely nothing, right? No direction, no kind of imbalances. We coming from this sweep. Could we go to take out that weekly? So we can of course mark them up. So for example, weekly's taken. We can go to the other weekly. Daily time frame, again, like no absolute chop here, and then we flushed on Friday, and then pretty much also an absolute chop right here. Why is there a day missing? Oh, Thursday, Juneteenth. It's actually not here. Okay. Yeah, I mean, we're coming from a sweep right there. And look at these crazy dojis. Like, it's absolutely crazy. Then we go to the quality time frame. Again, we're having kind of what looks like a V shape here. The market massively moving down, and then right now massively moving up. We're having kind of a quality bullish imbalance here, but still, like, if you just zoom out a little bit, who's currently in control? It's the sellers. We're making lower highs. So until you really start breaking some highs, okay, and making higher highs and bullish imbalances, I'm definitely not long biased. But honestly, I'm also not short biased because it's just not moving properly. It's kind of making a move down, but then massive move up, and then very slowly, and then just as you think it's gonna go down, it immediately reverses back up. This is just the pure definition of an uncertain market, of a choppy market. They just go for taking the liquidity and then go to take the other side and then go to take the other side. In such cases, you should really kind of tweak the strategy. Well, not tweak the strategy, but kind of really change up the trading plan a little bit. Know what kind of conditions you're in, so then you can potentially act accordingly. But yeah, this is who I am, right? It's having that bullish imbalance that is not retested. So if we happen to really see any sort of bullishness from here, then that is definitely gonna give us any volume. But in this precise positioning of the price, I cannot really tell you much. So hopefully I can update you more on Wednesday. Alright, DAX is something that I do not trade, however I do like the development of it. We pull back into the daily and then we literally follow through towards that liquidity, which is pretty nice. Then of course we have a weekly imbalance below, so let's break it down from the weekly. Do we have a weekly bearish? We do not. We do have this weekly bullish, however, and we are taking this liquidity on the weekly, which is very important because that can a lot of times cause the market to reverse. Now in terms of the daily, we're not getting daily bearish imbalances, which is not amazing. Thursday was very bearish. Friday gapped up and printed bullish. Nothing on the daily, unfortunately. And then going on to the hourly time frame as well, like we have this extremely small hourly zone here, and then we have one with a gap below. This being a gap here, the market can absolutely gravitate towards that gap. And also looking how the market is maintaining lower highs still, this market is still pretty bearish. So yeah, here if you want to take a short, I would definitely love to see a hourly bearish imbalance. Okay, a hourly bearish somewhere here to then potentially short. That is going to be your first target, and then that is going to be your second target. Okay, because just on the shorter term here, it looks absolutely bearish. There is absolutely no way for me to be calling longs, right? Longs are only going to be called if we start breaking above a high like this and a high like that, right? We're just gonna start triggering a chain reaction for all of these highs to potentially be taken. But sellers are currently in control, and just because we had a bullish Friday here, that is just profit taking. Okay, everybody that sold, they're gonna take profits, and that is gonna cause a little bit of a pullback. But if the sellers really step back in right now with a new hourly bearish imbalance, then the liquidity is gonna be very clear. And then of course we have that massive imbalance below us. So I'm still bearish on DAX. Let's see how it goes. Alright, to throw a little bit of a recap now, honestly, I have been a little bit uncertain about the majors right now. The DXY is pretty mixed up to me. It's kind of offering a very little sign of potential bullishness. However, it could just be profit taking for the market to resume the move lower. We really have to see how that daily imbalance is going to develop. And of course, for every single pair, I gave you a detailed outlook of what I want to see happening. Again, like EU, for example, is definitely looking more bullish than it looks bearish. I would definitely prefer longs, which means DXY shorts. So we really need to see that happen. Again, currently, the very key thing is that low here. Is it going to break below and with an imbalance to target the low? So is it going to sweep it to then start going higher? We really have to see that. GU is also very tricky because it's tapping into a weekly bullish, into a daily bearish, and then the hourly was bullish, but right now the hourly was bearish, so it is a little bit all over the place, honestly. I would prefer shorts simply because the fundamentals on the GBP are a little bit more bearish, but for that, I really need to see the market hold, for example, from a hourly imbalance like that, and then continue to go lower towards the liquidity, okay? And that really depends on what the DXY is gonna do. Aussie dollar and NZD dollar are also very simple setup from just a very singular hourly bearish imbalance. They have been kind of making lower highs very recently. That gives me more confidence for the shorts. So let's see if it maybe offers. Gold is extremely choppy this week, which simply means that the market is cooking for something. It's accumulating for a very big move. That is very likely going to come up with a catalyst. And then this week we have a lot of potential catalysts that can shake out the market. So I'm really looking to see which side is going to prevail and which side is going to start covering. So if we start getting the bullish move, all of the sellers from here are going to get stopped out, turning into a very massive buy. And of course, if the sellers really persist and the buyers give up, we're going to have a very large move, taking out all the liquidity. So again, to me, it's all about waiting to see what's going to happen. So super patient with it, but I'm going to be locked in because there could be a big move. USD JPY, absolutely not bad here. A beautiful uptrend, following structure very nicely with lower highs. So we have two hourly imbalances with a block If we happen to pull back, we do have liquidity targets for the longs. Euro JPY is another good pair here that we can look at. It can form a daily imbalance that you can trade on Tuesday. In the meanwhile, we have that hourly, but we're tapping into very strong weekly resistance to the left. So make sure to watch out. I would prefer to trade it on Tuesday afterwards. GJ, if you were to pick between the JPYs, these two are absolutely a lot better. This one is still chopped up because GBP is over a weaker pair. Indices, I have no outlook on the indices. I will be looking once again for the catalyst, for the market to start shaking up somewhere or shaking down. I don't care. I just need volatility and direction, because for the last couple of weeks, it has been very choppy and directionless. Okay. And yeah, pretty much on all of these are the same. And DAX is kind of looking a little bit more bearish. We had some profit taking here, but if we start following through with a fairly bearish imbalance here, we can definitely hit lower. Okay, so that's kind of the outlook for this week. Not a lot of certainty in terms of the DXY and the UGU, so this is why it's going to be very key for the Monday. It's going to open with a bang because we have all the PMIs on Monday, and that thing can potentially give us some sort of a direction. But of course, going in further into the week, it's always very important to keep flowing, because what happens on Monday is not always the true move. It's a lot of time manipulation, so you always have to have a way to be flowing with the market, which is what I'm teaching you to do in these weekly outlooks. So let me know how has June been treating you so far, because it's coming towards the end. I hope we're doing fine. I hope we're trading good trades. Let me know in the comments, and I'm gonna talk to you on the next outlook.